Good day, Junior Tickies. I'm Mrs. Brimacombe. We are now going to look at Paper 1, Question 2. This question focused on the share capital, financial indicators, and the cash flow statement. If we look at what is expected, the information relates to Brewer Limited for the financial year ended 28 February 2021. Prepare the ordinary share capital note, calculate the following financial indicators, and complete the cash flow statement. So we are now going to first focus on the ordinary share capital and completing the cash flow statement. If we look at the ordinary share capital note, remember now that the answer booklet, when you start your paper, you look at the answer booklet and familiarize yourself with the question. Read through the question paper then, and if you take note now, they provided figures to you. The information on the 1st of March 2020, which is the beginning, 800,000 in issue. It's provided you on the answer booklet 800,000 ordinary shares at the beginning. On 30 June 2020, 100,000 new shares were issued. So they provided that to you, 100,000 new shares issued, but we don't know at what price. On the 1st of January 2021, 30,000 shares were repurchased at R1.20 more than the average share price. On 28 February, shares in issue. It means that we need to calculate it. If you look at the ordinary share capital, they provided you with the figures end of last year and end of this year. So we're going to start by filling in the information which was given. The balance in the beginning were given. They've already provided you with the end balance. 30,000 shares were repurchased. This means that we can calculate the balance at the end. To calculate the balance at the end, we need to take the balance in the beginning plus 100,000 minus 50,000 equals 870,000. But now we need to solve the new shares issued and the repurchase. Remember that the ordinary share capital note always consists out of the average price. We need to calculate the average price. If shares were issued before the repurchase of the shares, we can always calculate the average price by using the end balance. So if you take the balance at the end divided by the number of shares in issue at the end, that equals my average price. Once we've calculated the average price, we can take 30,000 times R8.50. Now we can solve the new shares issued by taking the end balance plus, because we're working backwards, we need to do opposite calculations, minus, that becomes now the balancing figure. New shares issued 1,250,000. Now make sure that you take the answer that you've calculated in this note to the cash flow statement. This forms part of the financing activity. Reminder, cash flow from financing activity consists out of we need money. What is our options? We can sell shares to the public. That will be an inflow of cash. But now you need to consider, but what if the company decided to repurchase shares? Repurchase of shares is an outflow. What is another option is to borrow money from the bank. So if we borrow money, that is an inflow, but the repayment of the loan is an outflow. So this is what the financing activity consists out of. Here, we've calculated now the new shares issued was 1,250,000 because it's an inflow, no brackets. This is very important that you get it right in the cash flow statement. Shares repurchased. Now you need to be careful. When we look at the cash flow statement, it's always the total repurchase price. Now they said to us, we've repurchased it for R1.20 more than the average price. We've calculated the average price was R8.50. So to find out the total repurchase price, we need to take R8.50, which is the average price, plus R1.20, which was the amount above the average share price, and we times it by 50,000. That equals the total repurchase price, which must be in brackets because it's an outflow of cash. Remember in the beginning I said, what else does the financing activity consist out of? Loan. So now if we go and look at the extract from the statement of financial position, we've got loan from Sharks Bank. If we look at the balance at the end of last year minus this year, it's clear that there's a decrease, which means there was a repayment. If there's a repayment, it must be shown in brackets because this is an outflow of cash. Also, another point to remember, when we're looking at the loan repayment, it's always the capital amount. The interest paid is shown as part of the operating activity. The capital repayment of the loan forms part of your financing activity. We can now calculate the cash flow from the financing activity by taking the shares issued minus the repurchase minus the loan repayment. That equals 409,000. No brackets. If we focus now on the cash flow from the operating activities, cash generated from operations and interest paid was not required. So what else does this consist out of? This is very important that you understand your formats. Know exactly what goes where. The operating activity consists also out of dividends paid and tax paid. So now we're going to look at dividends paid. Dividends paid consist out of that which was declared or recommended at the end of last year, plus the interim dividends. So if we look at what was recommended at the end of last year, you need to go to the extract from the statement of financial position. Shareholders for dividends at the end of last year, 115,300 was declared. Whatever we declared or recommended at the end of last year must be paid this year, plus the interim dividends 162,000. This is an outflow, so it must be shown in brackets. Be careful. The final dividends recommended at the end of this year, we do nothing with that. That will only be paid in the next financial year. If we now look at tax paid, this can sometimes be complicated. We get confused with when should I add, when should I subtract. Because when we look at tax paid, we could owe SARS or SARS owes us, which means that if we owe SARS, we need to find a figure in trade and other payables. But if SARS owes us, it means we need to look at trade and other receivables. So there are different ways that you can get to the answer. My suggestion to get this 100% correct is to do a T account by opening up SARS income tax. If we look at how the information was given to us, it said there, SARS income tax credit balance at the end of last year, which means we owed SARS 35,900. At the end of this year, there was a debit balance, which means SARS owes us. Balance brought down means balance carried down. You should know that income tax is an expense to the company which will be debited, and SARS income tax will always be credited. Now we need to find out what is the income tax for this year. if I look at the extract from the Statement of Comprehensive Income, they provided us with the net profit before tax and the net profit after tax. If I take the difference, it will provide me with the income tax for this accounting period. To find out the tax paid, we're now going to add the credit side. This will be an outflow of cash. That's why it must be in brackets. Now, if you're doing your calculations on your cash flow statement and you're showing it here in brackets, you would simply say 35,900 plus 364,500 plus 29,100. We can now calculate the net change in cash and cash equivalents. Take note, cash flow from investing activity. It was given to you. There was nothing here that you needed to calculate. So to find out the net change in cash and cash equivalents, we have to take the cash flow from the operating activities minus, because it's in brackets, the cash flow from investing activity plus, because there's no brackets, the cash flow from financing activity. That equals the net change in cash and cash equivalents. Now we need to solve the cash and cash equivalents at the beginning and at the end. So looking at the information given, at the end of last year, we had 20,000 petty cash and cash float. Then if you go down, always check if there's a bank overdraft. We had a bank overdraft of 95,200. This means we need to find out what was the balance in the beginning. 20,000 minus 95,200 equals my balance in the beginning, negative 75,200. Take note that the bank overdraft was a zero at the end of this year, but we have a question mark for the petty cash and cash float. This means we need to calculate this. To calculate it, we're going to take 269,000 minus 75,200, and that is my cash and cash equivalents at the end. Before we move now on to the financial indicators, I'm going to remind you again, when we look at the cash flow statement, it is imperative. Make sure outflow, brackets, inflow, no brackets. Make sure that you show all your calculations in brackets to earn part marks. To calculate the following financial indicators, a formula sheet will be provided. Make sure that even if a formula sheet is provided, that you study your financial indicators. When you study your financial indicators, also make sure that if the financial indicator, if the final answer is given to you, and you need to find figures that you are able to do it, because it can happen in cash flow, in income statement, in my balance sheet, where they provide you with the financial indicator and you need to find figures. Looking now at calculating the operating expenses on sales. We have to take the operating expenses divided by the sales. All of these figures were given. This is always a percentage, which means we need to times it by 100, which equals 20%. So this is easy marks to get. All the figures are given to you. The dividends per share, be careful. If we look at the dividends per share, they provided you with the final dividend of 22 cents. I need to find out what is the interim dividend per share. To find that out, we need to take the total interim dividend per share. We need to take the total interim dividend, 162,000, divided by the number of shares. So what is the number of shares? Here, you need to make sure that you look at your dates. The interim dividends was paid on the 30 September 2020. This is after the company decided to issue an additional 100,000 shares. So the number of shares in issue is not 800,000. We're not going to use the balance in the beginning. We're not going to use the balance at the end. The balance is 800,000 plus 100,000, which means 900,000. So 18 cents plus the 22 cents, the final dividend, equals the dividend per share 40 cents. To find out the percentage return on average shareholders' equity, it's your net profit after tax divided by the average shareholders' equity that was given to you. Average means beginning plus end divided by 2. So we times it by 100. So again, this is easy marks to get. You just need to know what figures to use in calculating these financial indicators. The only one to be careful of is the dividend per share. So again, percentage operating, answer must be in percentage. Dividend per share, answer is in cents. Percentage return on average shareholders' equity, my answer is in percentage. Thank you very much. Next, we're going to look at question number 3. Hope you have a wonderful day.